Hello, fellow option traders. This is Jeff, and welcome to the market update for Friday, May 13th, 2016. All right, so it's Friday the 13th, but we all know that that's just a figment of your imagination if you think that that's a bad luck thing, because for me, it's pretty good luck. At least so far, and we'll get into that in a minute. But Friday the 13th, huh? Well, was not a good day on the 12th for jobless claims. Take a peek at that real quick. They were looking for 267. What they got was 294. And if you've been paying any attention to the mainstream media or even any other publications, companies like, I think it was Intel was going to lay off 20,000. Now, I'm assuming that they're U.S. employees because I'm sure they have plenty of people in China and India that are working dirt cheap. So I'm not sure if that's U.S. employees or not. The rest of the week, nothing really exciting. Retail sales and consumer sentiment all came in pretty positive. They actually got a nice bump. Consumer sentiment, they were expecting 89.7. They got 95.8. Now, I don't know if there's any upper limit on this or not. Maybe 100. Does that mean 100%? I don't know what that means. I have no idea what this number means, except that relative to other numbers. I don't know if 100% means that 100% of the people that they talked to thought that you could read probably the definition. Whether that's a percent or what, let's see. And 2 weeks income report each month. And attitudes about the economy. All right, so the same 500 or I don't know. That would be, I would like to take maybe a little bit of a closer look on that, but I don't really much care because all I do is pay attention to it from sort of a macro level instead of a micro level, and my macro level is still telling me I'm still bearish, very bearish. All right. There was a thing up here that said we're going to crash in 2016, that the market's going down 80%. Now there's a different ad up here. So anyway, there was an ad up there. Somebody's trying to sell something, trying to sell some sort of deal to protect yourself against the market crash that's going to be coming for sure. I don't know. I'm just bearish. That's all. I don't know if it's going to be a crash or what it's going to be. So I came out with a post yesterday. Some of you may have seen this. All I did was just post it on my blog, optionguru.com/blog, and I sold the put side on my wrought iron condor to eliminate any downside risk between now and next Friday, which is expiration. But before we get to that detail, again, let's go over and take a look at what is going on today. Let's hide that one. We'll take a look here. Market is definitely sinking rapidly. I mean, we were right around, flat almost all the way across here, and it's heading down now. So it's almost getting to the point where maybe I should put in an order, a limit order, to maybe sell this. Now, I did some research yesterday. Well, let's forget it. We'll talk about it. I'm sorry. I need to cover this stuff here. So the Dow and the S&P 500, Nasdaq, and the Russell are all down. The VIX is up 2.36% to 1475. Not a big number. I'd like to see it around 18 or 19. Gold is at 1270, still being manipulated by the big guys. Anyway, and then oil is at 45.93, sort of high. although down a little bit today. And the dollar's at 94.75, gaining a little bit of strength in the world. My concern is with Europe, in the European Union and the European Central Bank and England. You know, there's that's where it's going to hit first. My belief, and if you've been paying any attention to the news at all, whether you're a mainstream media person or a Fox person or an alternate media person, which I tend to be more of an alternate media person, Europe is in trouble. And they have overextended, and they've been QEing like crazy, and leveraging and leveraging and leveraging, and that is where it's going to start. So what's going to happen is the dollar is going to gain some strength, because where else are people going to go? All they can do is go to the dollar. So the dollar will gain strength. Against the euro, it's at $1.12 right now, which is almost parity. So that could be happening. I think once this flips and we get to like less than $1 here, I think that that's going to be a big sign. Now the Nasdaq just went positive. And the Russell's at 1103 or 1105. So now we're back down a little bit. Okay. But anyway, it's time for me to start thinking about putting in an order here. We'll cover that a little bit later. Apple. Here's my darlings from a past life. Ford is at 1341. We have a simulated cover call on that, and then we have a GLD, straight call and a covered call. So we're looking for a GLD to move up. Amazon still looking pretty strong. Let's take a quick look at a chart here for Amazon. I haven't looked at a chart there for quite a while. And let's just quickly skim through these. Yeah, Amazon's doing pretty sweet. I guess Bezos is peeling off some shares and pocketing some huge amounts of money. Baidu, suffering. Looking here, this Head and Shoulders here. No, that's kind of a high shoulder. I don't know. Definitely have a lower high, so we'll see if we're headed for a lower low or not. Chipotle. Looks like they still haven't recovered from their bad news on their bacteria. Costco. I don't really see anything there, just kind of wiggling around basically. It's going to bounce off of its 20-month moving average here. It's been a support point. Is it going to break down? I don't know. Let's look at the Dow. Kind of wiggling around. Not really heading anywhere. Not going parabolic, that's for sure. GLD struggling. LinkedIn looks to be suffering a little bit. Oh yeah. I haven't looked at it hardly this year at all. They must not have had very good earnings. I actually had very good earnings. How about this time? They had very good earnings there too. Huh. Maybe it's the business model that they're not liking, or maybe their guidance has been poor. Ford, struggling right now. Google, didn't like their earnings back here in April. I haven't looked at them for a while either. Here's my speculative. Ooh, wow. Take a big digger on that. But we're just going to hang on. Not going to get out of that for any sort of loss. Time does not matter with that particular one, so I'm not worried. The Nasdaq, struggling. Qs, which should look pretty much the same. Yes, it does. Amazing, isn't it? Priceline came down here and slapped a 20-month and then it's moving back up again. Still don't understand. I just don't understand that stock. We beat Rut to death here. Let's go right down to SPX. Let's see here. I have a big fat pipe for an internet connection, so I don't know what's going on here. Alright, so SPX, I have an alert set at 2126. Here it is, it's bouncing off that 20-month moving average after sinking below it, and now it's using it as support. Tesla. Tesla is below the 20-month, looking like as though it may be heading down, possibly again. Although on the weekly stochastic and MACD, it looks like as though it may be looking to reverse. So that could be a good positive sign there, because how much lower can you go here? And it tends not to stay down there. So in theory, it may be ready to turn around. That's just in theory. And we'll look at U.S. oil. I get this out of my mouth correctly. And then last but not least, I didn't really have anything to say about that, is the VIX. And like I said, I would like to see it at least above 16, maybe in the 18 handle, somewhere around there. And I know it's going to tell me, oh, you have a performance problem. Yep, I knew it. We'll just continue. Below its 20-month moving average, want to see it move up like it was back here the first part of the year. That's what I'd like to see. Alright, so let's take a look at the account. Let's go to all accounts. We'll close this up and zip this over. Get a nice full screen view here. Okay, so we're actually up a little bit here on our iron condors on, well, it used to be iron condors on Russell. Now it's just bear calls, credit spreads. And of course, we're looking for it to move below the short at 1100. And GLD, this is just the plain naked, not naked, it's a long call that I have here. Profit and loss from the open is $50.50. It's a 119. I bought it when it was in the money. And this is the covered call, which has a 119 also, and GLD is currently at 121. This is a June call. We're going to have to jump over to the Analyze tab here and take a look at and we went June here. I want to take a look at the extrinsic value, which is this column right here for our holding. And we are on the call side. Extrinsic is $1.58, $1.56. So that means that that's the time value. Nobody's going to be calling me out as long as it's that high. But the difference between 119 and 121 is only $2. So there is a bit of a risk, but I think most people are going to wait until expiration to exercise their long calls. So I'm not real worried about it. Alright, so I'm not worried about it for right now. Back to the monitor tab, and then there's NAVB. Let's go and take a look at Ford. They have a simulated covered call on that, and this is a July and it's a 13, and the stock is currently at 13.43. So if we were to take a chart here, and let's just put a price level, and let's edit it. Come on. Edit properties, and we'll make it at 13 because that's where the call is, and we said it was July, right? So we want to end it in July, and let's call it July 13 covered call. There. Now we'll have it on this chart forever and ever and ever. Never come off unless I tell it to. Alright, so don't plan on doing anything with that. That's just barely in the money. That should not July. See, they don't tell you what the monthly expiration is. They give you a date now. I'm a little upset about that. So July 13, extrinsic. Here it is right here, 13th. Extrinsic is 37 cents, and it's 43 cents in the money. So we are okay. Nothing to worry about there, although it's a simulated trade. We'll never get called out on that one. Alright. Alright, now let's jump over to RUT. Let's talk a little bit about RUT. We'll go to the spreadsheet. Here we go. This is the May 16th, 10:50, 10:30 bull put that I sold on 422, and I bought it back on 512 for $111 profit. There's 3 of them, so there's 3 of them here. So it's $111 profit. Okay, so we lost on this one when we had to buy it back, and we rolled it down from April to May. And now I did a little bit of math, and it's telling me that I need to make a profit of $775 in order to, on each of the 3, in order to get me to this 23.25 and zero out this loss. I could buy it back for $4 or less. I would be happy, but ideally I would want to buy it back for $2.55, and that would get me to even. So I don't even have to wait until expiration and hope that it's in the money. What I can do is hope that it gets around here someplace and gives me a profit for $2.55. So I sold it for $10.35. If I can get if I can buy it back for $2.55, that would give me that much profit on it, and I would be back here where I was before this debacle here, with the RUT just taking off like crazy. So I'd be happy with that. So $2.55 would get me pretty much back to even for the year, plus these 2 little profits down here. So that's going to be my objective. So I go back over here, go to the monitor tab, open up one of these, and left click, and then shift left click, and then right click and say create closing order. Alright, so there, I'm going to create a closing order, and I'll buy it back for $2.55, and I'll make it good till canceled. Hit confirm and send, and this is across 3 accounts, so that one and that one. So over here it tells you you have that position in these 3 accounts. So I'm saying I want a +1, I want to buy it back. And that's all there is to it. What you do if you want to do multiple accounts, you just come down here and click on multiple accounts. If you have multiple accounts, of course. So that order's out there. Now we can go to the chart, and we don't see the order. I think it's on the monthly chart. I don't have orders showing here. Okay. I want to go up here to my chart settings. Click on that little cloggy wheel there. And let's see here. Show orders. I'll click that. And say OK. So right now it's telling me that the price needs to get down to 1080 in order to collect, or in order to buy it back for $2.55. If we go over to the Analyze tab and say at 1080, it says that we would make $680.15 on that. And that's according to the purple line today. Now, if let's say that price moves right to break even. So right now, okay, let's say it gets right to break even. So right now, I could take home $321 on this trade. I'm only showing one account right now. I should probably show all three, right? And then let's say I only want to hide simulations. Okay, if we go to break even, and that's $905 as of today. That's where the purple line is here. Now as we get closer to expiration, if it stays at break even, this purple line will start to come up here to meet the Aqualine, it sounds like. Anyway, it's going to come up here to meet this greenish blue line. Oops, how did that happen? Man, I'm telling you, strange things are happening here. So this line will move up. So likewise on the chart, this assumed price will also move up. Actually, we just went positive for today. That's weird. Anyway, it's below this trend line, so I'm happy if we end up, we only have till next week. It's going to have to move down a little bit more. But the order's in. If I need to change it to $4, I can do that. Here's the orders right here. They're sitting out there. Good till cancel, buying back for $2.55. So if we have a big move on Monday or Tuesday down, hopefully these will trigger and I'll be out and I'll be happy. Or if we get a medium move down and it looks like as though there's a lot of downward pressure, then I will change these and I'll tweak them down, maybe down to $1. Or maybe just eliminate them completely, although I don't like doing that. I don't like waiting till expiration. I don't like things to expire out of the money. There's just too much risk in it. So just take your money and get out. So I'll take this. I'll even take $4. So if I need to change it to $4, I will do that. Okay. I think that's all I wanted to cover. Yeah. So if it ends up costing me $4, I'm okay with that because I still end up with the year profitable. So I can do that. I can handle that. I'd be happy with that. Okay? All right, so here we are. Let's see what happens. Stay tuned. I'd like to thank you very much for watching. Be prepared. Watch your step because it is Friday the 13th. And have a great weekend.